Good morning, everybody. My name is Steve Benham, and thank you for attending this webinar, which is one of a series we're doing around FP&A and enterprise performance management. Just a little bit of admin before we get cracking. As you may have heard, we are now recording this, which means that you can listen to it again. Probably after about a day or so, we'll have it available or offer it to your colleagues. Any questions that come to you as we go through the presentation and the demonstration, please do jot them down on the Q&A functionality, and we will either address them during the presentation demonstration, or we'll pick them up at the end, depending on the nature of the question. Everybody should be on mute already. Gratefully if you could leave it that way, so we don't get any background interference. Okay, let's go. A little bit about myself. I've spent about 20 years as a CFO, mainly in sort of medium-sized family-owned companies with venture capital backing. That involved often a trade sale after a few years. That experience was across many different sectors, of which a few were consumer packaged goods. After that, I've then spent about 25 years in enterprise performance management. I've had many different roles, ranging from leading a practice, in other words, the delivery side, consulting delivery side, and some commercial roles, including running about 10 distributors worldwide for a software company. My CPG experiences included a paper packaging company, a food manufacturer, and a mobile phone manufacturer, consumer division of a pharma company, and about 4 or 5 years as CFO of a company that made sort of motor accessories aftermarket, making basic accessories for consumer motor vehicles. Okay, let's sort of set the scene a little bit. First of all, Profit Am's mission is to help our clients get a good return on investment from spending money on basically finance transformation, including some technology. And the way we like to look at this is this sort of two-dimensional view here. So on the vertical axis, you can see we have waste, and then efficiency and value adding. And when we look at finance transformation, it's important to look at it through a number of different perspectives. So, for instance, looking at process, finance and admin processes, through technology and its related functionality. And you should never, of course, forget what data is easily available and what will take a bit of effort to generate. This is really where you should start, in our view, is on process and roles. So if we talk about the roles, we view 3 different types of role: those which are sort of more traditional, those which are sort of in transition, and those which are transformational. And I'm just going to move something out of my screen. That's good. So we just deal with the first column here, which is deliberately colored red. You'll see this is sort of a red, amber, green sort of analysis. What we find is that many finance departments, their main role at the sort of detailed level is that of data manipulation. So maybe that's a question to yourselves, is like, well, what is your finance department mainly doing? Are they mainly spending an enormous amount of effort on moving data around? Are they only able to produce sort of management accounts actuals, and even then maybe 5 or 10 days after the month end, and only able to do sort of produce a forecast, which is the actuals for the year to date, plus maybe adding on budget for the year to go. And when they are asked to do a forecast, it's like panic stations. It takes far too long, and because you really don't have the forecasting routines, in my experience, you end up making lots of rather unreliable assumptions because you just don't have time to think about, or even you don't even have the systems and processes to forecast what the future really is likely to look like. Moving across to sort of the yellow column, many finance departments have made this step from what I'd call wasting a lot of time and money to a more efficient way, and they have enormous focus on process automation. So you'll see, lots of jobs being removed because they're no longer needed because of technology being implemented, and often the process automated and transitional finance departments are able to do quarterly reforecasts. They can do year to go with sort of year to date, maybe 9 months year to date plus 3 to go. Often the forecasts do get included in the reporting pack. However, being able to reforecast quickly and efficiently to what I call the planning horizon, and by planning horizon, if you take an oil exploration company, their planning horizon may be 30 or 40 years because of the investment in oil fields or production or platform productions and things like that. Whereas if you're in the IT sector or software development, it may only be, your planning horizon might only be 2 years. Very few companies actually are able to reforecast quickly to their planning horizon. And finally, transformational in the green is what I call being a fortune teller. So the whole focus of your finance department is on being able to predict the outcomes of executive decisions or business as usual to the planning horizon. Sometimes these companies are beginning to introduce artificial intelligence and some predictive analysis into the forecasts. And in order to do this, they really need to have their finance forecasting systems and technology connected to any sort of sales department or operations departments, sort of more detailed operational forecasts. And really, they have a very good understanding of the processes, the business processes through the whole business, and indeed what drives those processes. And that's what I call process driver based. So let's focus. I talked about perspectives a few minutes ago. Let's focus on the technology perspective, because most transformation and agility needs some replacement or new technology. And the technology is really what gives you the additional functionality. So with all evaluations and selections of enterprise performance management tools, there's always this conflict in the decision making, whether to buy this one or that one, between flexibility and complexity. Let me explain. So many all finance departments still use Excel, but many still use it for planning and forecasting. And again, I'm using this sort of red, amber, green concept as well. So, and I've colored Excel red. Now, that might be slightly harsh because obviously everybody uses it and it is a fantastic tool. But what it doesn't do is fulfill enterprise performance management, and emphasis on enterprise. As soon as you start to gather data from remote locations, or you want to distribute reports around the business, or indeed you have quite a large volume to handle, Excel breaks down massively. You end up with version control problems. You end up with very slow and cumbersome models, all with links between them that then break as soon as you touch it, and so on and so forth. So, but nevertheless, Excel is very, very flexible, relatively simple to use. In the other quadrant, I'm bringing in with the amber color the more traditional EPM tools, developed largely by the big ERP vendors like SAP and Oracle, Infor, and people like that. So the problem here is these tools are trying to be all things to all men. They do handle almost any complexity that you might want to throw at them, but they come at an enormous software cost normally, and they also come at an enormous ongoing development, ongoing maintenance cost. That is both upgrading the software. There's usually these big upgrade. Well, there's hesitation at upgrading to a new version because of the cost of it and the risk of it breaking with the integration with other tools breaking. And also, these tools require very high level of expertise in consultancy, either external or external. And actually, all of that together means that people tend not to develop these. They might implement these tools once relatively successfully, but it's really difficult to justify an investment to keep those tools producing management information in line with the changes in the business. And for that reason, really, I would also color them as red. They really don't work very well. However, in recent years, as Anaplan has appeared on the scene, and we Profit and have selected Anaplan as our tool of choice, as our technology of choice. And Anaplan really handles everything that you can throw at it, except for the most extreme complexity, and has the additional advantage of being very, very easy to learn. So anybody who has learned Excel to a reasonable level can learn how to model in Anaplan, and that includes me, by the way. And I'm an accountant, and I'm not going to bother trying to learn a tool which is difficult. And Anaplan, I know how to do modeling to a reasonable level. Okay, let's move on. So let me tell you a bit of a story about one of our best clients, which is Orkla Foods Norway. Orkla is quite a large company, got 2 billion revenue, over 7,000 employees, and has quite a lot of complexity because it actually does sell about 6,000 products mainly to the supermarket sector in Norway. So they had been using Excel for many, many years, and they are, apart from EPM, so for their transactional systems, their ERP, they are wall-to-wall SAP. They very rarely adopt anything which is not SAP, and for that reason, even though they knew that their Excel that finance were using for forecasting and planning wasn't really giving them what they needed. In particular, it wasn't giving them the ability to run scenarios on bill of materials. If you like, when they have a new product or a product change, they want to be able to take the sort of recipe for the product and work out times the forecast volume and work out what the costs are going to be going forwards, and also the marketing, the investment in new product marketing. So they also had a problem in as much as they were using SAP profitability and cost management as the only EPM tool they were using from the SAP stable. A very good tool, but it was end of life, and they needed to do something with it. We've had a long history with Orkla. We implemented the PCM tool, and we recommended to them that they change to Anaplan, try and migrate to Anaplan. But the real clincher was the return on investment that they could get by using Anaplan for their new product development process, which runs right across the whole business, way beyond finance, and allowed them to do bill of materials, forecasting, and scenarios. So let's have a look at what Auckla actually have done. So in December, over a period of about 6 weeks, they migrated profitability and cost allocation. That's this shape at the top left-hand side. And then in January, they started this new product launch process. That took a few months. And then they've added into that more of the traditional finance planning, finance and operational planning use cases of OPEX planning, CAPEX, workforce planning. And all of that links forward into the Orkla Foods Norway financial plan. What's really important, there's a few things that are really important about this. So first of all, the new product launch is it's a process. It's not just functionality. It's a vital business process for all CPG companies. And at the core of this is a bill of materials calculation. Now, of course, SAP ERP has bill of materials in its core. But what that tool, it does the costing, the historic costing of production of CPG production pretty well. But what they can't do is run fast scenarios with it. They can't easily add a new product, in a matter of minutes, add a new product and see what the effect on profitability is going to be. Whereas by having a bill of materials functionality built within Anaplan, they are now able to do rapid bill of materials type scenarios and evaluations. And they carry on doing those evaluations all through the multiple stages of new product launch. The other thing with Anaplan is it allows, if you look at these blue lines, it allows linkage from one model to another. So the OPEX planning takes product marketing cost from new product launch. It takes any new production equipment or production equipment changes into capital expenditure. And then they have they do their workforce planning at the individual employee level, and that can roll back into OPEX planning. And similarly, with the allocated costs, they feed into OPEX planning and new product launch. And the whole lot then feeds forward with using these real-time links into the financial planning. So that's all been achieved in less than 12 months, about eight months. And Orkla are very happy with this. It's working very well for them. And they're now looking at what they can do. It delivered the 2022 financial plan. And now they're looking at reforecasting the plan. That'll be a relatively easy step for them.
I think just a couple points for me. I think where I remember that the feedback we had from CFO of Orkla was that he finally has a business plan, not a sales plan, not marketing plan, not plans managers plan, not people plan, but he's got a business plan. So one combined plan, everything in one platform, everything connected, like you've mentioned, right? New product launch, run by marketing, but any investment equipment flowing to CAPEX, that marketing spend, all that product forecast, the volumes, yeah, all connected as well to their ERP systems. They directly sourcing the BOM, the product costs, and the material costing, all the pricing assumptions. All this information is fed also automatically, very well integrated with the ERP. Also back, we're sending the results back into the Power BI using the native integrator of Anaplan. So there's also quite easy integration of taking the data into Anaplan from your ERP and also exporting it to the BI layer.
Thanks, Pavel. Do ask questions about Orkla if you have any. We're going to move on now because I can see that I need to speed up a little bit. So let's talk now about transformation and fortune telling. So the view I've formed over many years is that there's far too much focus in finance departments. Of course, you have to record the actuals as you have to do your sort of scorekeeper role. But actually, the real value to the business is in you being able to predict, is to forecast the future. And I call that fortune telling. So on the assumption that you do report historic actuals, your next area of focus needs to be forecasting the future. If you get good at that and you do it 4 times a year, or you can do it very quickly based on maybe there's a new product or a new company needs to be bought, and you need to see the effect on the impact on the future profitability of the company, then you can also run scenarios very quickly. So this forecast process is vital. And if you get good at doing forecasting, then the annual plan, instead of being a major exercise that takes you maybe 3 months, we've now seen companies run it in 2 weeks, 2 or 3 weeks. It takes all the grief out of the number crunching in the planning process. So a couple of little stories, really. I mean, I worked for a company as a CFO called Metro Products, which is this motor accessories aftermarket. And this is now 30, 40 years ago. Yeah, we'd stopped using a quill pen, but we did have computers and stuff. But, you know, I was very proud of actually developing a commentary on the monthly management accounts. And I took it to the CEO, and he said, well, that's great, Steve, but all you talk about in the commentary is how you've corrected errors from last month's. This is sort of over and under accruals type discussion in the commentary. He said, well, thanks for that, but it's really not what I'm interested in. I also don't need you to tell me that I've overspent on marketing, because I knew that 3 months ago when I signed the purchase order. What I need you to do, Steve, is to give me your best view of the future. And that comment has stuck with me all you know, for the rest of my career. And after I'd left, they were selling most of their stuff to Halfords. If you didn't sell to Halfords, you weren't in the market. And they decided, Halfords came to them and said, we want you to own brand a particular product. And they refused. And this product made up 70% of their turnover. And not surprising, the company went bust. And I can't help thinking that if they had the ability to do the forecasting quickly and the scenarios of own branding, they would have realized they absolutely needed to stick with Halfords and own brand this product. Just another very quick story about another client we have, where they were actually a startup consumer products manufacturing company. They weren't reporting actuals, but they desperately needed to forecast. They have a plan that they could rerun for the new venture capital potential investors. They needed to run it very quickly, and we used Anaplan to do that. And we built them a planning model in a couple of months, which they then used over and over again to new venture capital investors during this startup phase. So, the final word on this is, what I if I had my time again, I would appoint a future profit officer rather than a chief finance officer, so an FPO rather than a CFO, to get this focus on the future and forecasting right. Quickly on again, let's deal with technology and what traditional EPM architecture looks like. On the left-hand side, you'll see all the normal sort of transactional modules of an ERP system. In order to do anything with EPM, you're going to need a data load and transformation tool, an ETL tool. And then you'll probably need to feed it into a data mart, and then you will need some sort of model built, a forecasting model. You'll probably need another tool to do your manual data input. And then none of the tools you've got implemented in that set will actually do your enterprise-wide and integrated reporting. And many of them, and you'll struggle also to do integrated multi-dimensional slice, dice, drill down, and graphs. You'll need separate tools for also all of these. And just to prove my point, if you had a SAP stack, you would have the SAP ERP, you would have data services in data load and transformation. You would have probably business warehouse doing the data mart. You might have maybe still using an end of life profitability and cost management model for costing. To do manual data input, in the past we've used BPC to collect data and send it into the data mart from remote locations, and then you would need BI to do the enterprise-wide reporting. Now, if we move to more transformational EPM architecture, Anaplan will do everything that's blue. All those blue boxes, Anaplan will do in a single platform. And in addition, it's a cloud platform, whereas the traditional ERP vendors, some of it's cloud and some isn't. And even if they say it's cloud, it's not always genuine software as a service. Okay, that's me done. Carried on a little bit too long. Apologies, Pavel. So I'm going to hand over to Pavel. So I'm going to stop my share now. Okay, share.
Yeah, can you see my screen okay?
Yeah.
Perfect. Right, so thank you, Steve. Building all that background, and for what I want to show you is a bit of a platform, a few screens of actual technology that we've mentioned called Anaplan. So Anaplan is a modeling platform. This new, very modern tool built for financial planning, but very quickly clients realized that because of its flexibility, it can address also all sorts of problems where you basically had Excel that grew too much, and it had to scale up, serve multiple users, concurrent usage. So it's very quickly gone also into operational planning, whether on the sales side or on the supply side. What I wanted to try to explain here is example of financial planning where we have our front landing page consisting of a place where we can start creating our budgets, and that could contain top-down, bottom-up revenue planning, a bit of OPEX planning, or CapEx, everything that we've mentioned in the story of Orkla. How you could report performance, measure your actuals versus your plans, how you could do your forecast, and finally with scenarios. All that is underpinned with the data management. So data management is also very easy, very user-friendly, as Anaplan is a business tool, not IT tool. So you can load and validate those loads through the friendly user interfaces of Anaplan. So let's go into creating and having a look at how we could create our budgets, and let's start with a scenario of, okay, we want to create our targets for our different divisions. We have a company here where a top executive could look at in one screen, had a look at what the previous year sales were, and plan at a very high level the growth we want to achieve, and set the targets for the entire company. That very target that we've set based on the growth assumptions will be automatically, in this case, distributed to the regions. In this case, we have 4 regions, again with the historical sales, and based on that, our initial target would be distributed. What can we do at this stage? We may look at the initial target for EMEA, and we may not agree with it. So what we can do is we can override and say we actually, instead of 5% increase, we do want to have an 8% increase. And that will override the initially attributed target. But at the same time, it would keep the overall target here. We could do the same thing with holding the values. So anything here for the end user to play about with, really distributing the targets down, and you can distribute from global targets to regions, from regions to divisions, from divisions to maybe to months as well, or to products. Anyway, like that, to really give the business owners the target to aim for the next year. All that could be underpinned with the ability to have some level of submission, so kind of a workflow where once you submit your numbers, you cannot edit them anymore. Another functionality that is worth mentioning is an audit trail of history. So the system tracks absolutely every cell, what has been changed, what was the previous value for. So you have a full audit trail of all the changes in the model, so you know where the numbers are coming from. So you have this concept of traceability. Once we set up the targets, we could look into actually planning our bottom-up plans. So example in CPG company would be having starting with the price book assumptions, where we could, for example, have a list of our products. So they could be grouped into different categories. You could support multiple levels of those. You could have a country rolling up to the geos, or any sort of organizational structure underpinning that. We've got a time dimension here. We've got our different versions, our budget, our forecasts. We could have different scenarios, and then in Anaplan they can be created with the point of a button where you have absolutely every data and all the logic copied across to a new version, and you can compare them against each other, change the key variables. Looking back at one of the products, we have our historical price and cost. So here we're planning the margins. Again, we have the ability to override perhaps the margins and play about with that gross margin for all those products, and all that is automatically reflected across the entire model, all the graphs or any tables referring to that value of the sales or cost of goods sold. They will be recalculating the data automatically. So this is the performance and the speed of calculation is the great advantage of this technology. You don't have any time lag to change the data and then wait for the results. So that's to give this capability to manage the pricing and costs at still a fairly high level at the product level. And wanted to highlight that another component of building a revenue would be, in this case, the volumes, the units sold. What we're showing here is that you cannot override the values from January to March, and that's because of a concept what we call switchover. That means we are loading actual values here, and you can only plan for the future months. And at the point of the click, you can move from one month to another and update your actuals. So you always see what is your latest position, and you can ask everyone in the company to update what is the remaining year only. So you have this control over that process and governance over the data. One thing also that is quite useful is the end user can click on any cell. If it's not a data entry, it will be a formula, and an example of the formula is shown here. It's basically sold times average selling price. I have a referral here suggesting me where this data is coming from. So again, if I want to drill down on any number in this tool, I have this ability to drill down, and I can keep drilling and finding it where the data comes from. Again, this is about having this communication between the business and the finance. Being very efficient, you can give really to the hands of the users ability to drill down. At the moment, this happens through the email or Teams, and that communication is very challenging and time demanding from the controlling team point of view. So you can improve that quite vastly. And we can have a range of analysis delivered here. We could have price volume mix analysis with the supporting graphs. Again, all those information here, I could change my products, and all my data would be refreshed automatically. Another example, if we look at now the cost of materials or build up of the actual products, what we can do in Anaplan is not only have the simple one data point of cost of goods sold, but we can build our cost and manage that very deep. So with one of the clients, we were going down to the supply chain, and we were breaking this cost of raw materials, also even broken down further by supplier. And based on the historical information, we could maybe work out what is the proportion of each supplier supplying those raw materials. And then based on that, we could plan some price increases that we expect from those suppliers. And again, all that calculation could feed up into building our material cost. And then when you combine it with the information about the energy or the labor and factory overheads, then you can build a quite compelling calculation for the cost of goods sold. So really simple example here of how you could hold the unit cost per each raw material, again with the functionality to override each material, and that combined with the volumes gives us the cost of goods sold. Also an example here of the material usage, how we could have for each product the material used. Very simple example here. Of course, in reality, the bill of material, the recipe, and an example of Orkla was much more complex. And what we did there is it brought the bill of material information from SAP, especially for new product launch, when they could play with the recipes, change the raw materials cost, but also swap the ingredients or add new ingredients in. And new prices, all those capabilities can be built in and expanded, basically to serve the process that you need. What we're showing here is only a few inspirations for examples, but what we do with the client, we look at your process and we build a fully tailored solution to your needs. Lifting the greatest advantage of Anaplan, which is the flexibility and speed of the build. So that's on the revenue side. Very quickly, how we could plan our cost. Again, idea of having the bottom up and versus top down, having a very quick dashboard for the cost center manager to see where his gap is. On different types of the costs that I have planned, then I can plan those costs or review actual versus budget very quickly here, and identify where I'm maybe overspending. Like if I go to R&D, if we see from the traffic light that there is a problem here, I could go in and revise this dashboard and plan this cost in slightly different way. Remove some costs, challenge the contributors to this plan, and submit it back to the management, to my manager, and all that is supported with alerts, with commentaries. Anyway, anything really to support the friendliness and easy of use, anything to speed up the process. Another capability as well is I can type the comment here on this on this chat, and then the users of Anaplan can actually interact through Anaplan and not through any other communication tool. So there's lots of features and functions available out there. Steve, how much time we've got left? I think we want to leave a bit of time for the question and answers. I think we're pretty much there. Maybe I'll just finish off that all this wraps up into combined P&L, balance sheet, and cash flow. We also have variance reporting capabilities here, where you can compare actuals and forecast. It was really to show you the breadth of what's possible, what's capable. If you want to have a dedicated demo, happy to schedule a dedicated one-to-one time with you, where we can just deep dive and address your specific interests. I think that's all from me, Steve. I'll hand over to you now.
Thank you. Okay, back again, everybody. Hopefully I'll get that to it. So just wrapping up quickly, back to our main mission, which is return on investment. I won't go through this in any detail. I would just say that in our experience, simply moving from a very wasted data manipulation process to greater efficiency process using Anaplan alone can produce some very effective reductions in work effort and therefore return on investment. If you want to have a quick look at the Anaplan website, you'll find, for instance, a Forrester white paper and case study where they talk about the return on investment achieved in the hundreds of %. And that, again, when you look at it, is before you actually think about the additional value that you're adding to the whole business by being able to run forecasts and scenarios very quickly. So that's me done. I'm not going to talk. These are sort of a selection of our scenarios and the countries we work in. We basically operate all over Europe. Any questions, Grace?
No, Steve, not at the moment. If anybody's got any questions, you could enter them into the Q&A.
Okay. I think anything, Grace?
No.
Okay, well, thank you everybody very much for listening to us. As Pavel mentioned, if you'd like a sort of more personalized demo of Anaplan to talk to us about our sort of consulting services to help you with finance transformation, then please do contact us. You can email this address, Spiros at Profit and or contact one of us directly. Thanks very much and enjoy the rest of your day.
Thank you.